Event report, anticipated 50% adoption increase in blockchain by 2025. Overview. On February 2, 2025, industry experts gathered to discuss the transformative effects anticipated from a projected 50% increase in blockchain adoption by 2025. This surge is expected to revolutionize key sectors including gaming, decentralized finance, DeFi, and supply chain management by the second quarter of 2028. The event highlighted the implications of this growth amid fierce competition from established blockchain platforms such as Ethereum and Avalanche, which are continuously pushing the boundaries of technology and user engagement. Key insights and trends. 1. Gaming sector growth. The emergence of Web3 gaming is set to redefine the gaming landscape, with predictions suggesting an increase to 50 million monthly active users (MAUs) by 2025. Significant venture funding exceeding $4 billion in 2022 has laid the groundwork for this expansion, as game development cycles typically last 3 to 4 years. This facilitates a robust pipeline of innovative gaming experiences that leverage blockchain technologies, enhancing interactivity and user engagement. 2. DeFi evolution. Traditional financial institutions are increasingly integrating decentralized models into their operations. Many institutions are exploring direct integration of DeFi protocols, while others are opting to adapt these technologies in a compliant manner, indicating a growing acceptance of blockchain's potential to disrupt and enhance financial services. 3. Supply chain innovations. The integration of blockchain in supply chains is anticipated to enhance transparency and operational efficiency. Real-time tracking capabilities enabled by blockchain technology are expected to mitigate risks associated with fraud and inefficiencies that plague traditional supply chain operations. 4. Technological accessibility. The barriers to launching custom blockchains are rapidly diminishing, with new tools allowing individuals and organizations to create their own Layer 1 blockchains quickly and affordably. This democratization of blockchain technology is expected to empower a broader range of participants in the blockchain ecosystem. 5. Wallet evolution. Digital wallets are evolving from mere storage solutions into multifunctional hubs for diverse on-chain interactions. This shift aims to improve user experience and simplify the complexities involved in managing various blockchain assets. 6. Tokenization trends. There is a rising demand for tokenized assets as traditional companies begin to adopt blockchain technology for asset-backed finance. The shift towards integrating digital assets into mainstream finance is indicative of a broader trend towards tokenization across various sectors. 7. AI and blockchain convergence. The convergence of artificial intelligence (AI) and blockchain technologies is projected to accelerate, enhancing applications in areas such as data integrity and smarter decision-making. This intersection is expected to unlock new functionalities and efficiencies within blockchain networks. 8. Regulatory developments. Anticipated repeal of specific SEC accounting bulletins concerning digital assets in 2025 could signal a shift in the regulatory landscape, fostering further innovation within the crypto space. Timeline of events. 2022, over $4 billion in venture funding allocated to Web3 gaming. 2025, expected 50% increase in blockchain adoption, with Web3 gaming projected to reach 50 million MAUs. Q2 2028, anticipated transformative impacts across gaming, DeFi, and supply chain sectors as a result of increased adoption. Differing perspectives from sources. The insights shared at the event were corroborated by multiple sources, each presenting unique angles on the rapid adoption of blockchain technology. Source 1: Kraken, focused on general blockchain trends and their implications for various sectors. Source 2: Brave New Coin, highlighted specific crypto assets and projects that could shape the future of blockchain. Source 3: Ava Labs, provided an in-depth analysis of future blockchain trends, particularly concerning gaming and DeFi innovations. Conclusion. The anticipated increase in blockchain adoption by 2025 is poised to significantly reshape critical sectors by 2028, particularly in gaming, DeFi, and supply chain management. The discussions held on February 2, 2025 underscored the profound transformations that lie ahead, driven by advancements in technology, user engagement, and evolving regulatory frameworks. As competition intensifies among blockchain platforms, the focus will increasingly shift towards innovation and practical applications of blockchain technology across diverse industries. The anticipated 50% increase in blockchain adoption by 2025 is expected to have transformative impacts across the gaming, decentralized finance, DeFi, and supply chain sectors by Q2 2028. This surge comes amid growing competition from blockchain platforms like Ethereum and Avalanche, pushing the boundaries of technology and user engagement. Key insights and trends. 1. Gaming sector growth. Predictions indicate that Web3 gaming could reach 50 million monthly active users (MAUs) by 2025, driven by over $4 billion in venture funding in 2022. Game development cycles typically span 3 to 4 years, suggesting a robust pipeline of innovative gaming experiences leveraging blockchain technologies. 2. DeFi evolution. Traditional financial institutions are increasingly exploring decentralized models. Some are directly integrating DeFi protocols into their systems, while others are looking to adapt and white-label DeFi technologies to ensure regulatory compliance. This shift highlights a growing acceptance of blockchain's potential to reshape financial services. 3. Supply chain innovations. The integration of blockchain technology in supply chains is expected to enhance transparency and efficiency by enabling real-time tracking of goods and assets. Blockchain can help mitigate risks related to fraud and inefficiencies in traditional supply chain operations. 4. Technological accessibility. The barriers to launching custom blockchains are diminishing. Tools are emerging that allow individuals and organizations to create their own Layer 1 blockchains quickly and at low costs, democratizing access to blockchain technology. 5. Wallet evolution. The role of digital wallets is shifting from simple storage solutions to multifunctional hubs for various on-chain interactions. This evolution aims to improve user experience and simplify the complexities associated with managing multiple blockchain assets. 6. The tokenization trends. There is an increasing demand for tokenized assets, with traditional companies beginning to adopt blockchain technology for asset-backed finance. This trend indicates a broader shift towards integrating digital assets into mainstream finance. 7. AI and blockchain convergence. The merging of AI and blockchain technologies is projected to accelerate, with applications in data integrity, smarter decision-making, and enhanced functionalities for blockchain networks. 8. Regulatory developments. The repeal of specific SEC accounting bulletins related to digital assets is anticipated in 2025, signaling a potential shift in the regulatory landscape that could foster more innovation in the crypto space. Timeline of events. 2022, over $4 billion in venture funding is allocated to Web3 gaming. 2025, expected 50% increase in blockchain adoption, Web3 gaming projected to reach 50 million MAUs. Q2 2028, transformative impacts across gaming, DeFi, and supply chain sectors anticipated as a result of the increased adoption. Differences between sources. While all sources highlight the rapid adoption of blockchain technology, they vary in focus. Source 1 emphasizes general blockchain trends, Source 2 spotlights specific crypto assets and projects, and Source 3 provides an in-depth look at the future of blockchain through the lens of Ava Labs, particularly regarding gaming and DeFi innovations. In conclusion, the anticipated growth in blockchain adoption is set to significantly reshape critical sectors by 2028, with gaming, DeFi, and supply chain management experiencing profound transformations fueled by advancements in technology, user engagement, and regulatory changes. The report on the anticipated 50% increase in blockchain adoption by 2025 highlights several transformative effects across the gaming, decentralized finance, DeFi, and supply chain sectors by Q2 2028. While many insights appear straightforward, several critical nuances are often overlooked that could have far-reaching implications. 1. Gaming sector growth, significance of user engagement. The forecast that Web3 gaming could achieve 50 million monthly active users (MAUs) by 2025 is notable as it reflects a shift in user engagement towards decentralized platforms. The influx of over $4 billion in venture funding in 2022 indicates strong investor confidence, yet the significance lies in how this funding translates into user experience and community involvement. Why it matters: the gaming sector has historically been a testing ground for new technologies, and if Web3 games can successfully engage a large user base, it could validate blockchain technology in mainstream applications. The community-driven nature of blockchain gaming also means that players can have a more active role in governance and economics, potentially leading to more sustainable ecosystems that resist the volatility seen in traditional gaming revenue models. 2. DeFi evolution, traditional institutions versus decentralization. The increasing exploration of decentralized finance (DeFi) by traditional financial institutions is a significant trend. However, the nuance here is the dual approach of direct integration and white-label solutions. This indicates an important transitional phase where institutions are not merely adopting DeFi but are also attempting to control their use within regulatory frameworks. Why it matters: this could lead to a hybrid financial system where DeFi protocols coexist with traditional finance. It raises questions about the future of financial sovereignty and the potential for innovation stifled by regulatory compliance. How institutions adapt to this new landscape will shape the future of finance and potentially undermine the very principles that DeFi stands for. 3. Supply chain innovations, real-time tracking and trust. The report emphasizes the role of blockchain in enhancing supply chain transparency and efficiency through real-time tracking. What is often overlooked is the social and ethical implications of increased transparency. While companies may benefit from reduced fraud and improved efficiency, the implications for privacy and surveillance in supply chains are significant. Why it matters: as companies adopt these technologies, they must navigate the balance between transparency for efficiency and the potential for invasive tracking of labor and resources. The ethical considerations will be paramount as stakeholders demand accountability without compromising individual privacy rights. 4. Technological accessibility, democratization of blockchain. The decreasing barriers to launching custom blockchains is a critical point, indicating a democratization of blockchain technology. The ability for anyone to create a Layer 1 blockchain with minimal investment can lead to innovation but also to fragmentation and confusion in the blockchain ecosystem. Why it matters: this trend could lead to an explosion of niche blockchains that cater to specific communities or needs. However, the risk is that it may also lead to a dilution of resources and focus, making it harder for users to navigate and trust the various offerings. The challenge will be in creating interoperability and standards to manage this diversity effectively. 5. Wallet evolution, shifting role in user experience. The evolution of digital wallets into multifunctional hubs is significant for user adoption. While many see this as merely a technological advancement, the underlying shift in user interaction with blockchain is profound. It suggests a move towards a more integrated user experience that could attract non-technical users. Why it matters: as wallets become more user-friendly and versatile, they could serve as gateways for broader blockchain adoption. The simplification of user interaction will be pivotal in attracting users who may otherwise be intimidated by the complexities of managing multiple assets across different platforms. 6. Tokenization trends, a new financial paradigm. The increasing demand for tokenized assets indicates a significant shift in how value is perceived and transferred. However, what is often overlooked is the potential for tokenization to disrupt traditional asset classes fundamentally. As companies tokenize equities and fixed income, they may face regulatory scrutiny and challenges in establishing trust in these new forms of ownership. Why it matters: this trend could redefine ownership and investment, allowing for fractional ownership and increased liquidity in traditionally illiquid markets. However, the regulatory landscape will need to evolve to accommodate these changes. And companies will need to ensure that tokenization does not lead to new forms of market manipulation or inequity. 7. AI and blockchain convergence, implications for innovation. The convergence of AI and blockchain technologies represents a significant opportunity for innovation, yet many discussions around this topic remain superficial. The true significance lies in how AI could enhance blockchain functionalities and vice versa, potentially leading to smarter contract systems and improved data integrity. Why it matters: this convergence could unlock new business models and efficiencies across various sectors, including finance, healthcare, and supply chain management. However, it also raises concerns about data privacy, algorithmic bias, and the ethical use of AI in decision-making processes. Stakeholders must address these challenges to harness the full potential of this convergence responsibly. 8. Regulatory developments, shifting landscape. The anticipated repeal of specific SEC accounting bulletins related to digital assets signals a potential shift in the regulatory landscape. While this change is portrayed positively, the implications of regulatory evolution are complex and multifaceted. Why it matters: the regulatory framework surrounding digital assets is still in flux, and while the repeal may encourage innovation, it could also create an environment of uncertainty. Companies must remain vigilant and adaptable as regulations evolve, ensuring compliance while fostering innovation. The balance between regulation and innovation will be crucial in shaping the future of the blockchain ecosystem. Conclusion: the anticipated increase in blockchain adoption is set to reshape the gaming, DeFi, and supply chain sectors significantly. However, the nuances within these insights reveal deeper implications that could influence the trajectory of technology, user engagement, and regulatory landscapes. Stakeholders must approach these transformations with a keen awareness of the ethical, social, and economic consequences of their actions. Recognizing and addressing these overlooked aspects will be essential for fostering a future where blockchain technology can thrive sustainably and equitably across various sectors. 1. Transformative impact on gaming. The anticipated 50% increase in blockchain adoption by 2025 is expected to significantly reshape the gaming sector, particularly through the rise of Web3 gaming. A projection of reaching 50 million monthly active users (MAUs) highlights the potential for widespread engagement and innovation in game development. With over $4 billion in venture funding allocated in 2022, the industry is well positioned for growth. The typical game development cycle of 3 to 4 years suggests that many new blockchain-integrated gaming experiences will be launched, enhancing user interaction and revenue models. 2. Decentralized finance, DeFi integration. The evolution of traditional finance towards decentralized models is another critical point. Financial institutions are increasingly exploring the integration of DeFi protocols into their operations, showcasing a growing acceptance of blockchain technology's ability to transform financial services. This trend indicates a shift from merely investing in digital assets to utilizing the underlying blockchain technology. Institutions are beginning to adopt and adapt DeFi solutions, which may lead to a more significant overhaul of financial frameworks and enhanced regulatory compliance. 3. Supply chain transparency and efficiency. The integration of blockchain technology in supply chains is anticipated to provide substantial improvements in transparency, traceability, and efficiency. By enabling real-time tracking of goods and assets, blockchain addresses issues such as fraud and operational inefficiencies inherent in traditional supply chain systems. This transformative potential can lead to more secure and reliable logistics, benefiting various industries by enhancing trust and reducing costs associated with supply chain management. For technological accessibility and wallet evolution, the diminishing barriers to launching custom blockchains signify a democratization of blockchain technology. With emerging tools allowing for quick and low-cost creation of Layer 1 blockchains, more individuals and organizations can engage with blockchain solutions. Furthermore, the evolution of digital wallets into multifunctional hubs represents a significant shift in user experience. These wallets will not only store assets but will also facilitate a variety of on-chain interactions, simplifying the complexities often associated with managing multiple blockchain assets. This evolution aims to enhance user engagement and broaden the adoption of blockchain technologies. These 4 points encapsulate the anticipated transformative effects of blockchain technology across key sectors, emphasizing the broad implications for user engagement, operational efficiency, and the overall landscape of digital interactions. 1. The rise of the Internet and e-commerce, 1990s to 2000s. The widespread adoption of the Internet in the 1990s transformed various industries, particularly retail and communication. Companies like Amazon and eBay emerged, revolutionizing how consumers shop and interact. The shift from brick-and-mortar stores to online platforms significantly changed consumer behavior and business models, leading to the explosive growth of e-commerce and digital marketplaces. 2. The Industrial Revolution, 18th to 19th century. The Industrial Revolution marked a pivotal period in history characterized by the transition from agrarian economies to industrialized and urbanized societies. Innovations such as the steam engine, mechanized textile production, and the expansion of the railway network dramatically transformed manufacturing, transportation, and labor practices, leading to increased productivity, economic growth, and significant societal changes. 3. The advent of electricity and its impact on society, late 19th to 20th century. The introduction of electricity transformed industries and daily life. It powered factories, improved communication through inventions like the telephone and telegraph, and changed residential living with electric lighting and appliances. This shift not only enhanced productivity but also paved the way for new technologies and innovations, fundamentally altering how society operated and interacted. Future outlook: predictions for blockchain adoption by 2028. The anticipated 50% increase in blockchain adoption by 2025 is poised to catalyze transformative effects in the gaming, decentralized finance, DeFi, and supply chain sectors by Q2 2028. This growth is occurring amidst heightened competition from blockchain platforms like Ethereum and Avalanche, which are driving advancements in technology and user engagement. Here are the key predictions and insights into how this adoption will reshape these sectors. 1. Gaming sector transformation. By 2025, it is projected that Web3 gaming will reach approximately 50 million monthly active users (MAUs), driven by significant venture capital investments exceeding $4 billion in 2022. With game development cycles typically spanning 3 to 4 years, the influx of funding will enable studios to innovate and release blockchain-based games that offer unique player experiences and true ownership of in-game assets. By 2028, we can expect a mainstream acceptance of gaming integrated with blockchain technology, leading to new revenue models and player engagement strategies. 2. Decentralized finance, DeFi growth. The landscape of financial services is shifting as traditional institutions increasingly explore decentralized finance models. By 2025, we can anticipate that many financial institutions will adopt DeFi protocols, integrating them directly into their operations or utilizing white-label solutions to navigate regulatory frameworks. By 2028, this integration will likely lead to a significant portion of financial transactions occurring on decentralized platforms, reducing costs and increasing efficiency while providing users with greater access to financial services. 3. Supply chain innovations. Blockchain technology is set to revolutionize supply chain management by enhancing transparency and traceability. The ability to track goods in real time will mitigate risks such as fraud and inefficiencies, offering a more reliable and efficient system. By 2028, industries from retail to manufacturing will have fully integrated blockchain solutions to improve inventory management, reduce operational costs, and build consumer trust through transparent sourcing and logistics. 4. Technological accessibility and custom blockchain development. As technological barriers to launching custom blockchains diminish, we can expect a proliferation of Layer 1 blockchains tailored to specific use cases. The emergence of no-code platforms will empower businesses and individuals to create their own blockchains quickly and affordably. By 2028, this democratization of blockchain technology will lead to a diverse ecosystem of specialized blockchains that address niche markets. 5. Evolving role of digital wallets. Digital wallets will evolve from mere storage solutions to multifunctional hubs for managing various on-chain interactions, enhancing user experience. By 2028, we will likely see wallets that seamlessly integrate with DeFi platforms, gaming ecosystems, and supply chain applications, facilitating smoother transactions and user engagement across multiple sectors. 6. Increased demand for tokenized assets. The trend towards tokenization is expected to gain momentum, with traditional companies increasingly adopting blockchain for asset-backed finance. By 2028, tokenized assets such as real estate, equities, and commodities will become mainstream, providing greater liquidity and accessibility to a broader range of investors. 7. Convergence of AI and blockchain technologies. The merging of AI and blockchain is projected to accelerate, enhancing data integrity, decision-making, and operational efficiencies. By 2028, we can expect innovations that leverage both technologies to improve service delivery across various sectors, including finance, healthcare, and logistics, resulting in smarter and more secure systems. 8. Regulatory developments and market maturity. The anticipated repeal of specific SEC accounting bulletins related to digital assets in 2025 may signal a more favorable regulatory environment for blockchain innovation. By 2028, as regulations stabilize, we may witness a more mature and compliant blockchain ecosystem, fostering further investment and innovation. Conclusion. The projected 50% increase in blockchain adoption by 2025 is set to have profound implications for the gaming, DeFi, and supply chain sectors by Q2 2028. As competition intensifies among blockchain platforms like Ethereum and Avalanche, we can expect rapid innovation and transformative changes that will redefine user experiences, operational efficiencies, and financial accessibility. The next few years will be pivotal as businesses and consumers alike adapt to this evolving landscape. Leveraging blockchain technology to unlock new opportunities and enhance existing systems.